This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. And I did up a post yesterday. It's quant-based, but for those kind of interested in market structure, some of you are advanced option traders and or just quant interested or focused. So here's what I got, and I want to focus your attention to how this can interrupt the apple cart or derail the train if it gets going as it relates to negative gamma turns into selling, whether Iran escalation, disappointing Nvidia earnings next week, etc. So first of all, historic dispersion. This is a quant focused theme for 2026 that really hurt them actually in October, November timeframe when the market underneath the surface was doing the start of this tech wreck. Remember the $0 club theme that I had in October? It ended up being the top, literally, for a ton of unprofitable tech plays, including my favorite ASTS in the space sector. But it didn't matter. The mania that had run into AI hit a wall. That oxygen that I talk about with option structure that you must continue to feed into the fire. As soon as it dissipates, guess what? The building crumbles. And that happened with silver for the exact same reasons. Remember my entire diatribe on silver? And we caught it live on January 28th and 29th because I said the fire just is going to stop raging and this building is done. And this is basically what happened with the unprofitable AI tech ecosystem players, as well as all that rare earth mineral metal mining extravaganza. Remember drones, space, the whole thing was in fugo into October. Boom, it hit the top. That hurt what's called hedge fund factor rotation, something I study. Most people don't care about it unless you're really geeky, and I'm not, but I really care about market structure. So I tend to focus on stuff that matters. Some are focused on just macro or just fundamental or just quant or just technical. I tend to combine all of it and see patterns. I don't write about quant very often because I need to see inflection points, and I see an inflection point. So part of what I wrote about last night and sent out, critical levels for a quant quake. And again, some of you are going to say, what the heck is all this stuff about? If you don't care, don't read it, ignore. But for those who do care, I'm highlighting that even if we have a bounce, that the market structure is basically set up that these price insensitive buyers and sellers are in fact selling every rally. So I go through and I kind of explain, what does that mean? The dispersion trade been historic only 8 other times. This is the 9th time in history has this outperformance, this growth to value in particular, this wonderful rotation call that I had in November, said it would last until February. And then in lieu of sector rotation, there'd be volatility, likely March into May. That was just my experience with this hedge fund factor rotation. So the difference this time is it has been so outsized that now you have massive amount of bullish sentiment into this theme for continuation. So now you have Morgan Stanley saying the halo trade will boost hard assets. It's no fluke. You've got the Josh Browns of the world coming in and saying the most important theme of 2026 is halo. So they're coming out now in February after I had set this one up in November, December, January, February. February is actually when I said, be careful. That's when we're going to have consolidation before volatility. But it doesn't matter. The point is this dispersion of growth to value was an outlier. And historically, looking forward, because it was in its 99th percentile for absolute dispersion spread, again, if you don't care about quant stuff, just go with the fact that this is a statistical outlier, okay? And forward returns can be very challenging. So this is why my mantra of in lieu of sector rotation, there will be volatility. This is a line that I have for many years and why I study sector rotation. It's critical. So we're waiting for a value to growth bounce. We're looking for stabilization. I've shown you my growth to value ratio, et cetera, and it's going to be a few weeks, maybe months. So the point is we're waiting, anticipating, and there are a lot of software stocks on sale from Mag 7, Amazon down 20%, Microsoft down 30%, Oracle down, oh my goodness, 40%, 50%? The point is there are tons and tons of stocks on sale, but when is it safe to go in? So that's my job. But for right now, I want to identify how serious a move this was underneath the surface. And I want want to highlight that CTAs, which are these price insensitive, again, buyers and sellers, are still pressuring the market. So they are still long. So I want to put that in quotes here. But I have studied also CTA positioning. And when I see this get kind of negative on a zero, right, this positive above is bullish. And when it goes negative, it's bearish, then selling can pick up. When the trend is your friend higher, you go with it, vice versa on the downside. That would change if it scoops around and comes back in. That would obviously change if we get peace. Iran escalation de-escalates and we get peace. You'll see a nice bounce. But in the meantime, we don't have that. We have nothing but daily, hourly reminders of increased tension in the Middle East. And 1/3 of U.S. Navy military assets in the Middle East. And Iran has shut down the strait for a little bit, not just for exercises, but to make a point. Anyway, the point is that the CTA selling hasn't even picked up. And it's not like a big, oh no, they're going to sell. It means that it will contribute to sell-offs. And that's really key. When does it matter? When we go into negative gamma. So negative gamma, you can read about it. I even do some little bookmark tips there at the end of this post. But long story short, we have flipped negative gamma. And that just means that they sell the rallies. And this is where we're going to see if we can get a little rally going and we can stabilize and then start moving higher. They'll start really, really buying the highs, not selling the highs. But in the meantime, that's not where we're at. We do have some potential selling, $134 billion by these systematic strategies in the down market. And they could buy a little bit if the market is flat, and they could buy a little bit more if the market is up. But you can see how this right now is risk reward. It's on the downside, and it's really hard to fight that. Let me just put it that way. So you can read more about this, but basically this is talking about dealers and deltas and gamma and quants, but it's very important to market structure. And then there are some key levels that we can get below. Bank of America has theirs, Spot Gamma has theirs, I have mine. The point is we're definitely in a weakened state. And I want you to understand that. Now, I have written about my thesis on Iran. Risk is not priced in. I don't think it's going to be a one and done. I don't think it's going to be a 12 days. I think this is very dangerous. And so therefore, I want you to be aware of it and why. I also think that we have lots and lots of AI software, metal volatility, crypto volatility that has not been repaired yet, despite earnings. We do have some event risk coming up, which is between now and next week, we're going to get some findings here on IEEPA tariffs potentially and Lisa Cook firing, very important. We definitely have continued earnings, which are helpful, but not really market moving as it relates to a big old direction. We'll get minutes of the January FOMC meeting this afternoon, about 2 o'clock. Okay, that's helpful, but we're already starting to price out rate cuts. And then a slew of economic data, which will make mini moves in the interest rate complex. We don't really right now have a calm rate volatility backdrop. Dollar is still firm, and there's lots going on right now in Japan. The new Japanese PM did a press conference this morning. I have not had a chance to take a look at that, but there's deals going on between US and Japan, but how real are they? There isn't any detail yet that I can see on who benefits. So I'll get into all of that. But the point is, pace yourself. We have a massive week of economic data into Nvidia earnings next Tuesday. That will cap really the bulk of the earnings season. We had Palo Alto, ADI doing great on the hardware, Newmont, behemoth gold miner, Deere. You can see what's happening to the industrials. It's been hot fire flames. Walmart has been just the easiest layup for my rotation of consumer cyclical buildup. It has been the easiest. Lots and lots of stocks in the consumer cyclical space were oversold bounces, but Walmart was a new trend long and it has worked brilliantly. So the point is we still have some great color coming in from companies, but the overarching thesis right now is that Iran risk is not priced in, and we really need to pay attention to that, I think, first and foremost.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.